Arizona Property and Casualty Exam. Welcome to the quiz. Describe vacancy implications for a commercial property policy. Is it A, may suspend or restrict coverage? Or B, has no effect? C, automatically doubles coverage? Or D, triggers business income payments? The answer is A. Vacancy in a commercial property policy, usually greater than 60 days with no business activity, may suspend coverage for certain perils, e.g., vandalism, theft, glass breakage, or restrict overall coverage because unoccupied/vacant property has higher risk of loss. It has significant effects. It does not double coverage or trigger business income. Because vacancy often limits coverage, this is correct. Next question. What does endorsement mean in insurance? Is it A, policy cancellation notice? Or B, written change to the policy? C, premium invoice? Or D, claim denial letter? The answer is B. An endorsement is a written document attached to the policy that modifies, adds, deletes, or clarifies coverage, conditions, limits, or terms. It is not a cancellation notice, invoice, or denial letter. Because it changes the policy in writing, this is correct. Next question. How does the deductible in a property insurance policy function? Is it A, insurer pays the entire loss? Or B, insured pays a specified amount per loss? C, applies only to liability claims? Or D, waived for total losses? The answer is B. In a property insurance policy, the deductible functions as the fixed dollar amount or percentage that the insured must pay out of pocket toward each covered loss before the insurance company begins to pay any benefits, which means the insured always bears the initial portion of the loss themselves. This mechanism serves several important purposes. It reduces the number of small claims submitted to the insurer, which helps keep administrative costs down. It encourages the policyholder to take reasonable care of their property to avoid minor losses, and it allows the insurer to offer lower overall premiums since they are not responsible for every small claim from the very first dollar. The insurer never pays the entire loss unless the loss amount is below the deductible, in which case the insured pays everything. The deductible applies to first-party property coverages such as dwelling, other structures, personal property, and sometimes loss of use, not only to liability claims which are third-party coverages. It is not automatically waived for total losses. In most policies, the deductible still applies even in total loss situations unless a special endorsement, like a waiver for total loss, is added. Because the deductible requires the insured to pay a specified initial amount per loss, this is exactly how it functions in practice. Next question. Which statement describes binding authority? Is it A, agent can issue policies on insurer's behalf? Or B, insurer can deny any claim? C, policyholder can cancel anytime? Or D, only underwriters can bind? The answer is A. Binding authority allows an agent to immediately bind coverage on behalf of the insurer, e.g., via oral or written binder. Insurer denies claims, policyholder cancels per terms, underwriters approve, but agents often bind. Because agents can bind coverage, this is correct. Next question. Describe absolute liability. Is it A, liability imposed by law regardless of fault? Or B, liability based on proven negligence? C, liability limited by contract? Or D, another term for vicarious liability? The answer is A. Absolute liability, also called strict liability, is liability imposed by law regardless of fault or negligence, meaning the defendant is responsible for damages even if they took every reasonable precaution. Commonly applied to abnormally dangerous activities, e.g., explosives, wild animals. Negligence requires proof of fault. Contractual limits are separate. Vicarious is for another's actions. Because absolute liability does not require fault, this is correct. Next question. What is loss valuation in property insurance? Is it A, method to determine amount payable? Or B, cause of loss? C, deductible calculation? Or D, policy term length? The answer is A. Loss valuation is the method used to calculate the amount the insurer will pay for a covered loss, e.g., actual cash value, replacement cost, agreed value. It is not the cause, deductible, or term. Because it determines the payable amount. This is correct. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.